We have Gautam Trivedi with us, co-founder and managing partner of Nepean Capital, now joining us. Gautam, good morning. Thoughts on the recent market move? It's been a big move in this month of October, almost a 7% Nifty move.
So I think if you look at the positives in the market right now, there are a bunch of them. First and foremost is oil, of course. It's had a sharp correction given the fact that the US now is pumping out even more oil than Saudi Arabia and Russia. So that's obviously had a huge impact on bringing the price of oil down. And that has a direct correlation with our economy, our equity markets. I think the second factor is the stabilization of the rupee as a result. And after a long time, we've actually seen FIs giving a positive print this month. So I think the numbers that I last saw were $463 million month to date. And I think if you look at the overall situation in the economy, as much as some pockets of the media make it out to be that things are really tough, every flight that I have taken this year, and I take on average 2 flights a month within India, they're full. Everything is sold out. So I think there is a huge revival that's happening, which I don't think a lot of the people are actually taking cognizance of. If you look at the aviation sector as a whole, you're seeing a significant improvement in their load factors, anywhere from 80% to 85%, in some cases 90%. So I think there are positive signs and green shoots definitely out there in the economy. In fact, yesterday I met team leads, the management of team leads, and I asked them how's their business, and of course they're in a segment that has a good read into what's happening in corporate India, and they said corporate India is hiring. So I think there are certain green shoots that are starting to come through, and of course oil and currency playing a major factor in what we've seen.
Yes, we were discussing credit offtake as well just a while ago, Gautam, and that also appears to have picked up to about 16%, a 5-year high, we were told. Good morning, Gautam. I was more interested to know your view on the political setup. Did you do any tours of the election districts, and do you think the BJP will romp home with a 2:1 in terms of the states that are going to polls?
Honestly, I haven't done it this time as much as I've done it for the past, I think, about 6 years every time. But I think let's try and figure out what is it that the market's priced in and what's the market not priced in. I think the market is pretty much priced in a Rajasthan loss and a Chhattisgarh win. They're divided on MP. So that's, I think, where the status today is. Having said that, let's look at a few other scenarios. Markets not priced in a loss in MP. Markets not priced in a win in MP, Chhattisgarh, as well as Rajasthan. So obviously, if that were to happen, the market would significantly rebound from where it is today.
Okay, well, hi, good morning, Gautam. I think you're synonymous with these election drives that you do. I mean, ever since you were with Religare, we used to speak to you on that. But, that's on the election bit. We have many more triggers, right? I mean, over the next 2 weeks, we have the RBI monetary policy, there's the G20 meeting, the OPEC meeting. What do you think is the most important trigger for the market over the next couple of months?
I don't think the market's expecting at this point any rate hike from the RBI, so I don't know if that's really going to be a very big event. My concern really is to do with the fact that we've had a pretty weak quarter of earnings, and this particular quarter that we're in right now is not necessarily going to be great either, because of the fact that it's going to bear the full brunt of the higher oil prices and the currency. So as a result, we're heading into another potentially weak quarter of earnings. And that's obviously a concern. The second concern I have is to do with the fact that the US, I mean, that market's been on a bull run for the past 10 years. It's biggest ever since post-war. And as a result, the concern that's building up when I speak to international investors is that how long can this possibly last? And I'll tell you why that's so relevant. While the US accounts for only 24% of global GDP, it accounts for as much as 55% of global equity market cap. So any major correction in the US market, no market in the world will be spared. As much as people like to talk about India being decoupled, but that hasn't happened, it will not happen for a while. So I think these are the 2 concerns that I have going forward, actually a lot bigger than the RBI made.
By the way, just point out, I think Mitesh spotted that Z Entertainment, just pull out that stock. It's just 4%. Got wings all of a sudden, and it's a massive surge happening on that stock. That one up quite a bit, 4.5% higher is what you have on that stock right now. A big move. In fact, it started that day when the promoter announcement had come, and after that, it's just been one way. But today also looking like a big move. Pritesh, I'll come back to you, but since we have Gautam with us, Gautam, your thoughts on media and the kind of moves that we have seen in some of these names like Zee Entertainment?
Yeah, I think Zee is obviously a very specific situation where the management has clearly indicated its interest in selling a majority of their stake and to a strategic partner. So obviously that news flow between now and the time the deal consummates will keep the stock, in a very buoyant mood. Having said that, I think the larger media plays that I would bank on would be companies like a Shemaru or even possibly a Saregama that are riding on the geo wave that's sweeping the country. So I think there's a significant positive impact caused by geo. I don't think anybody's fully understood that, whether it's the entertainment industry, whether it is economics in general, and the fact that Reliance has come in and completely redefined the telecom industry in this country. Sure. So as a result, I think I would stick to names like Shemaru and Saregama.
Okay.
In fact, Gautam, I wanted to come to you on that. This space, the NBFC space, the real estate space, you think it's time to just stay away for a bit because there could be some more accidents here because of the crisis?
I think so. I agree with you that we should investors in general should stay away from at least the housing finance companies for sure, and or NBFCs that have a significant exposure to the real estate sector. Let's understand fundamentally what's gone wrong in the real estate sector. I think, when a developer sizes or makes an estimate of demand for a construction or a project, I think they were looking at basically two buyers. You would have the real actual buyer, and you would have the investor buyer. The investor buyers are pretty much gone. I mean, that demand is just not there anymore. And as far as actual and real buyers are concerned, that demand's down anywhere from 50 to 60%. So as a result, a lot of these projects are basically not necessarily viable, or the demand for those projects is down significantly. So which obviously impacts their cash flow and their ability to then service loans that they've taken from the NBFCs. The problem is any of the bigger NBFCs or the housing finance companies that you talk to talk exactly the opposite. They say that we're very confident that none of our loans are going to go bad. Other people have problems because we only lend to the top 10 developers. So I think that's really what is unfortunate, that these guys are giving wrong signals. But I would certainly stay away from the sector.
Okay. What would you buy today, Gautam? Would it be just plain vanilla consumer? Which sector attracts you?
Yeah, I think I would between now and May of next year keep a very defensive portfolio. I would buy IT. I would buy selectively pharma, consumer, and again a very boring answer, but private sector banks.
Okay. Which ones? Private sector, retail, private sector. Now even the corporate lenders have done very well.
They've done very well, and I wish ICICI and Axis the best, but the fact is merely changing management and i.e. the CEO doesn't necessarily mean the NPLs are going to go away. So I think let's wait and watch what they do, how they address the NPL problem, how aggressively they actually recognize the NPLs. I mean, I'd like to wait some more time before I put money behind Axis and ICICI, but frankly, I think I would continue with the Kotaks, IndusInd, and HDFC Bank.
All right, Gautam, we leave it at that. Thank you so much for joining us and giving us your view on the markets as well as on individual stocks. There's a slightly circumspect view, concerned about earnings, and the next quarter could be a bit weak. That's the word coming in from Gautam Trivedi.